Well, what drew us to begin with is the fact that CEE in general presents quite nice opportunity, quite nice mix of risk and return parameters. So it offers much higher yields compared to Western Europe. Yet, because the CEE countries are members of the European Union, it also gives you adequate protection of your capital invested.
Maciej, again, thank you very much for being here for this interview. To start our conversation here, I would like to ask you just to introduce yourself and your company for our audience, please.
Thank you, Bruno. Maciej Tuszyński, I'm a managing director of Fortress Real Estate Investments Limited in Europe. We are solely focusing on logistics space. We are both developers and long-term investors in logistic parks located in major urban areas. At the moment, we are focusing on our investments in Poland and Romania.
What drew you specifically to the CEE region, and how do you see your edge compared to the traditional European players?
Well, what drew us to begin with is the fact that CEE in general presents quite nice opportunity, quite nice mix of risk and return parameters. So it offers much higher yields compared to Western Europe. Yet, because the CEE countries are members of the European Union, it also gives you adequate protection of your capital invested. Plus, the CEE economies are generally growing at much higher pace, which is definitely helping real estate investments. Therefore, it's a mix of those three factors. So the economic growth, the stability provided by the membership in the EU, and attractive yields that drew us to invest in the region.
And going deeper into your asset class, the logistics, what's a clearly no-go or a clearly challenge that we have here at the CEE region for you?
For us, I don't see a no-go type of parameters or that would prevent us from investing, at least not in the short term. Obviously, we are quite selective in terms of how do we approach our new investments. Started with investing in the larger countries of the CEE region. Just to get a better exposure in one country rather than going, one asset per one country, which is helping you from the operational cost perspective and also getting a better foothold with the tenants active in the region. We are obviously aiming for servicing indigenous clients as well as the big multinational. So in our long-term strategy, we would like to be present in as many countries as we can. But we established to grow our presence in the two biggest countries, in Poland and Romania first, before we take on other jurisdictions.
You're known for having a very creative approach to the capital deployment. Mm-hmm. How are you navigating today's valuation gaps between the sellers and the buyers?
Mm-hmm. Well, we are typically on the buying side rather than selling side. As we are more long-term holders, so we are not looking into exit. Obviously, the liquidity of the market is important for us to be able to maintain the value of our investments. But we are more on the buyer's side, and actually we are just. There is no, hidden truth or any kind of a golden rule. Actually, you have to just continue screening the market to find the right opportunities where a seller is also motivated enough to sell at the price that simply makes sense from our perspective. If we are unable to find such opportunities to directly deploy our capital and invest in the ready products, we have a very strong development capacities, very well developed internal ones. Therefore, it's our second leg of business, if I call it this way. And then we are also trying to develop our projects from scratch And that usually provides us with a lower cost level at entry, because we are based on cost, not on the value of the ready project. But of course, we are then assuming all the risks, including the usual development risks, the leasing risk, and so on and so forth. But that's a bread and butter of our activities.
At the moment, are you looking to partner with local players or local platforms, go solo, or buy portfolios in Europe?
We do not have a bias to any one of those. We try to have an open approach. I think what would be the most difficult would be to open ourselves to partner up with the local platforms, especially in terms of countries like Poland. It's very much dominated with the foreign capital. So the local money is usually active on the development side, which usually is rather a transactional partner for you rather than a long-term partner. When we are looking into long-term partnerships in co-ownership structures, or potentially joining forces in order to scale up the activities faster, we would be happy to welcome the Polish, Czech, and other players. Well, maybe Czechs are right now active, but in order to form good joint ventures between two investors, you have to be open to more international environment. We also have some investors that are already investing in our fund, which is stock quoted in Johannesburg, and potentially they are also interested to maybe invest directly into the platform in the CE market alongside of us. So this is a good source of cooperation, let's say, and increasing our deployment capacities.
Perfect. And just a final question. What do you like most about your participation here at the GRI?
Well, I like the direct contact with colleagues, getting their views. Those are quite often selective senior executives who are not shy to share their even sometimes controversial views. And I think this is what makes it very interesting, because you can check your intuition against, let's say, the perception of other very important market players, get some good traction, and quite a lot of new, fresh ideas, even though we are all focused on a very traditional real estate market, but still there are new innovative ways how to approach it.
Perfect. So thank you again. Thank you very much for the interview, and I hope to
you.
see you soon.
Thank you, likewise.